Hey folks, it's Vic Noble here with another weekly trade example for the week ending February the 5th of 2010. Looking at the US CAD pair here, and I'm going to show you a trade that we actually did not take. And this is very important. A lot of people live in a sort of a myopic world here where they don't really see what's going on. They think that trading is just, totally about, mechanically taking these technical setups. It's not, and you're going to get into trouble doing that. You have to have a bigger picture approach to trading than just that. And here's a great example of that. Look at the resistance at this level right here. You see that? And it was bouncing off. This looked like really juicy in here to sell this thing here. So we're looking at the 4-hour chart, and it was setting up just perfectly for what we like to see, which is negative divergence. You can see what was happening. See the highs were going high. This is coming into the same resistance area that we saw on the daily chart just now. And look what the MACD was doing. See how it's going down? So that's a sign that we're going to probably have a drop. So we like to sell rallies in here. Well, in our Live Connect room, we had actually alerted people to look for that a few days before this, or as this was sort of unfolding here. But if you go down to the 1-hour chart, I want to show you what was happening here. Here it was again. You can see the divergence. See the price was going higher. The MACD was actually going lower here. The peaks were going lower. And we had this big drop. We like to sell rallies in this case. And we were going to sell it up in this area here, stop over here, that kind of a thing. However, in our Live Connect room, Chris Mathis, the fellow who looks after our MACD divergence trades, alerted people to, wait a second here, we're going to hold off on this because of other reasons that were happening in the markets, and you have to be attentive to what's going on. In this case, what was happening on the 4th is that the market was having a severe meltdown. The equities were crashing. There was a big move out of risk into the safe haven or at least still perceived safe haven of the US dollar, and it was a very, very dangerous environment. And when these things, and there was numbers coming out, when these things happen, I tell you what, you better understand how to use this stuff, or you're going to really get your head handed to you in a hurry. And what he did is he was waiting to see, what was going to do some kind of a reaction here as price moved into our area that we were looking to sell at. And I want to show you what happened. We had this huge leg up. I mean, that's very, very strong. Another kept going up, and another leg up past these highs. So had you sold in here, you were finished right there, stopped out. And so here's a trade example of a very, very good trade that set up really nicely at a resistance area on a higher time frame, just like we like to see, and looking to sell it up in this area here based on all the resistance that we're seeing and negative divergence. Everything was in line technically, but there's other reasons that you have to be aware of not to take trades. So anyway, those are just the kind of things that we like to point out to people in Live Connect and keep them out of trouble. And the deal is here is to teach you how to become a trader and how to think like that and how to be aware of these kind of things so you can be independent. You don't have to rely on anybody for your trading. You can do it all yourself. So anyway, I hope that's helpful for you. Just a good example of how to read the whole situation, and in this case keep you out of a trade that as you can see would have cost you some money there. Okay, have a great weekend. I'll be back at the end of next week with another weekly trade example.